Now, when military operations begin in one part of the globe, its impact does not always stay there. Sometimes the first sign of conflict appears not on the television but on the stock market chart, oil prices, and economic forecasts. And according to the source material, that is exactly what happened after the latest escalation in West Asia. Well, the US and Saudi Arabia carried out coordinated retaliatory airstrikes against Iran-backed military position in eastern Iraq. The strikes reportedly came in response to drone attacks targeting Gulf oil facility and marked a significant development in a regional conflict. Military operations often create immediate uncertainty, but in this case, the first major reaction came from global energy market. According to resource Brent crude oil price, it climbed above $87 a barrel following the strike, reflecting growing concern about regional stability and future energy supplies. Now, you may wonder why oil prices react so quickly to the geopolitical events, right? Wait. Answer is simple. West Asia remains one of the world's most important energy-producing regions. Whenever conflict threatens production facility, shipping routes, or oil infrastructure, global market immediately begin pricing in the possibility of supply disruption. And yes, higher oil prices rarely affect only the energy sector. As transportation becomes more expensive, businesses face higher operating costs. In the meantime, manufacturing expenses rise, shipping costs increase, airlines pay more for more fuel. Eventually, those higher costs begin reaching consumers through the price they pay for goods and services. And that is why investors pay close attention to every major military development in that particular region. In the meantime, according to the resources, higher energy prices could also increase inflationary pressure, making it more difficult for the central bank, including the US Federal Bank, to lower interest rate as quickly as market had anticipated. And this has created a chain reaction. Higher inflation can lead to higher interest rate. Higher interest rate influences borrowing cost. Borrowing cost can affect businesses, investments, and financial market. So what begins as a military operation in one region can eventually shape the economy decision around the globe. And yes, in the end, it also notes that as regional tension grow, financial markets begin reassessing risk across the banking system, sovereign debt, and cross-border investment that is linked to West Asia. That is why, ladies and gentlemen, geopolitics matters far beyond the battlefield. A single military decision can influence oil prices, inflation, stock market, and investors' confidence within hours. In today's interconnected world, national security and economic stability are becoming increasingly difficult to separate.